How to finance your business. Businesses require finances to start or run their operations. These finances include the owner's money or borrowed money. Businesses are either new or existing businesses. New businesses require financing for idea testing, concept finalization and actual start of operations. Existing businesses require financing to meet their operational and administrative needs. Financing requirements are either short-term or long-term, based upon its use. Short-term financing is used to meet operating expenses such as purchase of raw materials, paying salaries and utilities, payment to vendors. Long-term financing is required for purchase and installation of plant, machinery and equipment, construction of land and building, mergers, acquisitions, and buyouts. Ask yourself, can your business financing requirements be met through your own sources, or do you really need to borrow? Preparation of a financial feasibility is a key tool to assess your financial requirements. It is important for businesses to establish verifiable and logical estimation on costs and benefits to determine amount of financing required. A bank is more ready to finance an SME business with minimum 2 to 3 years of experience. Financing can be generated through internal and external resources. Let's talk about internal sources of financing. Prior to deciding upon external sources, it is advised to generate funds from the business's internal sources by managing cash flows and working capital, inducting owner's equity and availing trade credits from suppliers and customers. External sources of financing. Funds are raised through external sources in the form of either equity or debt. Equity financing. Equity financing is the selling of an ownership interest to raise finances. Equity investors are considered partners in profit and loss sharing. Equity financing can be received from friends, family, venture capitalists and angel investors, etc. Debt financing. Some of the most commonly available options of debt financing are fixed asset financing, running finance, overdraft facility, working capital loan, credit cards, business lines of credit, etc. Debt financing can be received through conventional lenders like commercial banks, leasing companies, government loan schemes and microfinance lenders. For more information, visit our website www.smeda.org.